Welcome back. This is Corporate Radar, and we're going to talk to the management of Eicher Motors. That's the next corporate we're tracking today. Company registered a very strong growth both in their Royal Enfield and the commercial vehicle business in August. In fact, the commercial vehicle sales were up nearly 30% year on year. Does that talk more about the revival in the industry? We'll find out. Vinod Aggarwal, MD and CEO of the company, joins us now to talk about that. He, of course, is the CEO of the commercial vehicle business. Mr. Aggarwal, thanks a lot for being with us. It was a strong 30% growth this time. What led to that? Is it because of a low base of last year, or is demand genuinely picking up? And across which segments did you see the maximum traction this time?
I think it is fundamentally due to the industry doing very well, and we are continuing to do better than the industry in all the segments. If you look at the overall industry YTD growth now is around 5%, and we have grown on YTD basis by 12%. For the month, industry has grown by 20%, and we have grown by 29%. Now, if you break up into the segments, the heavy-duty trucks, the industry has grown by 20%, and we have grown by 50% in heavy-duty trucks. In light and medium-duty trucks, industry has grown by 12%, and we have grown by 30%. So overall, we are doing in all the segments better than the industry. And this growth in the industry is in spite of still a very, you can say, big decline in exports. Exports number are down significantly, but overall domestic industry is doing very well.
Okay, all right. Mr. Aggarwal, hi, good morning, and good to hear that you're outgrowing the market. Give us a couple of details. Year to date, you've grown by around 12.2% till the month of August. For the year, what kind of a growth will you be looking at in comparison to what you delivered in FY23? And since you're growing at a faster clip than the industry, give us the updated market share numbers.
As far as the likely for the year is concerned, I think it is very difficult to predict. But overall, we are very positive about the industry because the economy is doing well. And of course, there are investments happening in infrastructure, which is leading the growth in the CV sector. And there are still a lot of replacements to happen. So therefore, overall, we are very positive about the industry growth. And we are expecting that the industry will continue to grow. And based on that, we are expecting that we will keep on growing faster than the industry based on our strong strategic initiatives.
Okay. What's the updated market share, sir?
As far as market shares are concerned, in heavy-duty trucks, we are now at 9%. Last year, we were at 8% YTD. And in light and medium-duty trucks, 5 to 18 ton, we are now at 33%, 33 plus. And last year, YTD, we were at 31%. And in buses, we are at 23%.
So, I have a couple of more questions. Okay, heavy duty, you said you were at 9% right now. I think you were 8.5% in Q1. So, hopefully, you'll get to double digits in the heavy duty segment. Are you looking at that double-digit market share in the heavy duty truck segment by, say, the end of this fiscal?
That's the plan. Let's see.
Okay. So, double-digit market share, that's the plan at least, in the heavy-duty truck segment. Can you tell us, in terms of margins, is there scope to increase overall margins further? I mean, for the business, I think it's been in this range of 25-26%. But now that, you know, the most segments are improving quite a bit, I think discounting has also come down. Is there scope to increase margins further?
Our EBITDA margins in Q1 were around 8%. And last year, it was 6% in the commercial vehicle business. Of course, the margins in the Royal Enfield side are much higher. So we have improved the margins in the first quarter. Let's hope, based on the control in discounting, let's hope these margins should get better on.
So EBITDA margins in the commercial vehicle segment, you said you closed at 8% in Q1. What is your target by the end of the year? Double-digit margins in the CV space?
Normally, we don't talk of the specific numbers, but if the volume grows, we will also get the leveraging benefit. And if the discounts remain controlled, then we will see better margins. And in any case, inflation is right now stable. So therefore, we are not expecting costs to go up significantly.
All right, Mr. Aggarwal, as you mentioned, when we started this conversation, that exports continue to be under pressure. Though on a year-on-year basis for August, it didn't degrow at least in double digits. Year to date, it's still down close to 40%. How do you see that shaping up? Do you think that for exports, gradually you'll see a recovery from here on?
Exports of commercial vehicles out of India, it used to be around 5,000 units per month average. Now it is at 2,000 units per month. So that's the type of situation in the industry. And it is largely due to the South Asian countries, specifically Bangladesh, Nepal, and Sri Lanka. All these three markets where India had been very strong, these markets are down by 70% year on year. So therefore, it has significantly impacted the exports out of India. On the other hand, we had not been very strong in Middle East and African countries or Southeast Asian countries. So we have grown our shares in the Middle East, in African countries, but those markets are still very small. The large impact has come because of South Asian markets, Bangladesh and Nepal. Hopefully, the situation should get corrected there based on the steps that these countries are taking. But still, as of now, the stress is there.
Okay. All right, sir. Thanks a lot for being with us. Appreciate your thoughts here. That's Eicher Motors talking about the business and the pickup that we've seen in the commercial vehicle sales. They've seen a market share improvement across a lot of their key segments as well. Let's take a quick